Hey, what's up guys? It's Jeff with Simply Derivative, and here's your daily recap video. So today we're going to start with equities, specifically the ES and the S&P, all major indices really, NASDAQ specifically, S&P, Russell was strong, but we saw a late day rally off the lows in most of these major indices. We got as low as 26.23 in the S&P, and now we're closer up to 26.55 after market, after Apple came out and reported and had beat as well. Last 2 days, Friday and Monday, we were down on the majors, and today you see a late day rally pop it back up. We're getting closer down to this 200-day MA around the 26.15 area, so that's a key level that we have to keep an eye on. But overall, we're basically holding this big consolidation pattern, this wedge pattern, this symmetrical triangle, whatever you want to call it. We're holding this lower high, lower low pattern. We are coming up right into the 200-day moving averages. Like I said, you have the 50 MA coming down. We'll see how price reacts as these two moving averages get closer. But we can expect some choppy trading until this range is broken out in some form or fashion, either to the upside or to the downside. Now tomorrow we do have the Fed rate decision for May. It's most likely going to be a no raise. They're going to leave rates as is, and then look to June to raise those. Right now we're looking at a little over 94% chance that they're going to leave rates where they're at. And when you go out to June, you see a 92% chance that they're going to raise it at least 25 basis points. So we'll keep an eye on that. That definitely has an impact on bonds and interest rates. Speaking of interest rates, we are sitting at 2.976 on the 10-year. You know, a small distance away from that 3% mark. We did put in this particular high that was above 3%. I don't know if you want to call that an island reversal, whatever the candlestick pattern is, but we had made new highs, broke up above 3%, and now have pulled back slightly, and we'll see how things play out after tomorrow. Like I said, there is a Fed rate decision, and so we'll look to put on some positions after the news comes out. To today, we had, like I said, Apple come out and report their earnings, their quarterly earnings. They had beat, and you can see that the stock is up about 5.5% right now. This is a 24-hour chart, so you see all price action in Apple, and we had come up right into this area up at the 178 zone where we last week, 2 weeks ago, maybe 2.5 weeks ago, we had bought Apple puts, the 180s, in anticipation of a down move. That's what we got. Now it's bounced back all the way back up to that area, so we'll see how it trades tomorrow. But with that, you saw the S&P pop up, and the NASDAQ really made a move up about $140, 140 points from the lows this morning, and as the market closed, it pulled back slightly, but you know, we'll see if we can take advantage of some opportunities, specifically looking at some shorts tomorrow on the good news with Apple. We are still, you know, in this area of overhead supply, so there is some opportunities, but we'll see how we trade tomorrow. And then what else did we have? The dollar, that's right, the dollar moved up quite a bit in the last week and a half, 2 weeks. It broke out of this range above 90 bucks, $89, and now we're trying to clear this 92.50 zone. I do think that the dollar is going to continue to move up, but we have some overhead resistance right here up at this 94 area, so that's a good zone to pay attention to. And that's going to correlate with our commodities and currency futures, so we have to pay attention to the dollar. The level I really like is much higher. It's above this whole almost head and shoulders, if you will, zone up at this 95.60 to 96.50 area. You had a stall, a base, pullback, stalled out again, and a nice move down. They tried to rally them back up, couldn't get back up there, and so there's further evidence that there may be some more selling pressure up here. So we'll wait. We got to get through these zones first, the 93 to 94, and then we'll look at the 95 to 96 zone. Other than that, that's it, guys. Be sure to follow us on social media, subscribe to us on our YouTube page, and check out our new ebook. We have a new ebook out, the complete guide to profiting from the derivatives markets. We cover futures, we cover options, trade setups, creating the ever important trade plan, and we also go over some psychology to help make sure you guys are in the right mindset while you're trading each and every day. So be sure to check that out. Go to simplyderivative.com/playbook for our new ebook. And if you want more ideas, a better understanding, better real-time analysis of the markets, how we take advantage of these type of moves and opportunities, check out our group coaching. It's a trading room, a chat room that's open 3 days a week where we're sharing our screens, going over the markets real time. We're giving you real-time trade ideas, and we're taking real-time trades as well. And so if you really want to learn, if you really want to generate that consistent income and stop getting stopped out, stop blowing up accounts, and really understand the options and futures market, then check out our group coaching room. You get 7 days free as a trial. Be sure to sign up today, and we'll see you in there tomorrow and Friday. All right, guys, take care.